That is called your stop loss. So stop loss is not a point which arbitrarily to please our mind we can put it. If you are saying that okay, I will buy Nifty at 5766 and I will put 5760, this may be pleasing you. Your mind is being pleased, yes, my stop loss is 6 point. But if it triggers, that 6 point is a loss for you. So 5746, based on the current scenario, 5746 is the downtrend and 5766 is the uptrend confirmation point. You are expected to move by 40 points. So these two parameters for time being you ignore. We are working on this particular part. So 5766, my uptrend starts and I am at 5755 level now. 5760, in fact I have come to now. So once that 46 comes and I will be selling, keeping a stop loss of 66. And as per the current volatility at 938, we are expected 40 point oscillation in the Nifty, and these are our levels. So much about the volatility I will talk afterwards. So this is what for the Nifty. This is what for the Nifty. So this is what for the Nifty. And in fact, we can take for some currencies also. Suppose currencies I am taking USD INR 28th August and I will be hitting the button same way. And currencies, if you can see, currently it is quoting at 61 rupees and 10 paisa USD INR. 61 rupees and 10 paisa, 61.2094, my buy entry is being set. 60.97, my sell entry is being set, and currently based on the current volatility in the currencies, I am expecting 47 paisa oscillation in this, and based on this part I will just take a print screen of this and I can just save this experiment. So we have taken for Bank Nifty, we have taken for Nifty, we have taken for USD INR, and good amount of volatility is there in the USD INR. So USD INR, you must start this tool after 15 minutes of market open. If 9:15 market opens, just give a 15-minute gap so that the prices need to be settled down. Then you can think of initiating the trades in this. So now let me take for some stocks also. I'll be going for ICICI Bank, some equity segment. ICICI Bank I have taken. So some 3-4 stocks also, so that we can have a basket of experiment which we can able to evaluate. So 9,905 and 897, and if I can see here, equity segment 901, so 4 rupees I am away from this part. So let me take the print screen of this one also. Print screen of this one, ICICI Bank, I can save it here. I can save it here. So ICICI Bank I have taken. So let me take one more stock, maybe one 2-digit stock let me take, so that when you prefer to do the trades in the 2-digit stock for intraday trade. So let me take some of the 2-digit stock. So let me take Syndicate Bank. Syndicate Bank. I'll answer all the questions. Keep putting your questions. So it has given you the pricing levels. Once the level comes, then only you are entering. So Syndicate Bank I am going for. So all Nifty symbols are here. I am just pressing S so that it will be migrating to all the stocks which is in the basket, or else you can remove some stock symbols and keep the stock symbols of yours. That also freedom you have in this software. You can remove some of the symbols. So 83.56 and 82.13, 13 paisa, 83.56, and Syndicate Bank. This is a future. Let me take for the equity. Syndicate Bank. equity segment. 82.90 is the price it is quoting now, and we have calculated 83.56 and 82.13. These are the points of our entry. So now I'll be taking the print screen of this one. So something on the options also I'll be discussing. So I have taken 2 readings on this part for the cash segment. 2 readings I have taken for equity segment, and currencies also I have taken 1 index, bank Nifty and Nifty also I have taken. So let me go to the option front, and how long I can wait for this level to come. Once I have taken an experiment, maximum 1 hour I can wait for the maximum 1 hour I can give the stop to breach the level, or if it is breached also, it should give me the target, at least 1 level of target during 1 hour of my holding. If it doesn't, then I will be recalculating, or I will be thinking to exit from this trade. So this is what I can do. So now just moving to, so this is for the Nifty we are doing, and we have loaded all options. Analyze future 5766 and 5746. This is the level of Nifty future our trends are sitting. So now let me see where this Nifty is trading now. Where this Nifty is trading now. 68.5768 level it is trading. So 5768 we have given the buy entry is being triggered for the Nifty. Buy entry is being triggered for the Nifty, and we have initiated the buy entry here, and once the buy entry is initiated, so definitely our attention will go for the call option. So we are at 5768, so 5800 call option will be nearest. So now it is quoting at analyze option premium. So 103, so 5800 option index, Nifty 5800. I'll tell you many tricks which can, if stop loss is a fear factor for you, you can think of applying a small trick so that you can be. So now Nifty is in the buying level, and also 5800 call option is at your buying level, 103 level, 104 level it is quoting. So think of buying the call option with a stop loss of 93 in between targets 106, 108, 110 and till 122 you are expecting. So we are buying this one also. So 5800 call option we bought with the expectation to touch 123 with a stop loss of 193. So this also I am just saving here. So I have just saved this, all experiments we are saving, all the analysis whatever we are getting in this thing, we are saving all these things. Fine. I'll go back to your question at the end of the session only. So let me explain something on the volatility. So what it does, this volatility system, how it works, let us understand that. Suppose in this volatility system, though the software uses a different method to calculate the volatility, for your explanation sake, I have just devised a small way to explain you. So here past 10 days last traded price I have taken into account. I have calculated their volatility based on the logarithmic process. What is a logarithmic process? I will be using a ln parameter, current price divided by previous price. By this process I have calculated ln square. At the end I have calculated their averages. Then I will be calculating the variance and volatility, which is square root of its variance. So This volatility says till 8th July, whatever the data I have taken, for 9th July, Nifty will show me 1.23% of price move. But I do not know whether this 1.23% of price move will happen in the upward direction or it will happen in the downward direction. That is not known to me. That is not known to me. So for that I have to determine the trend. So what are the process of determining a trend? So Fibonacci principle says whenever your price crosses our 0.382 retracement, that time only your trend used to confirm, and the subsequent trend will be 0.5, subsequent resistances rather I can say 0.618 and 0.786. That is for the Fibonacci. Same way the Gann principle says whenever your price point crosses the 15-degree trend line, 15-degree trend line, that time you sets the trend, 45-degree trend line confirms the trend. So this is for Gann principle. Same way the Elliott wave principle says that if you are in an impulsive cycle, then the completion of third wave is called as your trend confirmation. If you are in a corrective cycle, the completion of wave B also confirms your trend. So that doesn't mean that impulsive and corrective should happen only in the upward and downward. Impulsive can also happen in the downward. This is for the three principles what we have used in this with the volatility. So based on the Fibonacci, when you should use the Fibonacci, when you should use the Gann. So whenever the annual volatility, because daily volatility you are getting, and annual volatility is nothing but daily volatility multiplied with square root of 365. This is annual volatility. Whenever annual volatility is less than 20%, that time we are using Fibonacci principle. Whenever it is greater than 20 and less than 40, we are using the Gann principle. Above 40% annual volatility terms, we are using Elliott principle. So these are the principles are being used, and based on this particular principle, whatever your trend point comes, you are going to take the call on that. So this identification of trend as per Fibonacci, Gann or Elliott principle is not by me. I have not done that. Anybody who studies the Fibonacci and Gann or Elliott principle, you will find out these are the common principles for finding out the trend as per Fibonacci, Gann and Elliott. So now, once the volatility, how we can club this volatility? So volatility doesn't, it's nothing but it says that how much oscillations you can get for this particular day, 1.23. So in the pricing term, if you can see on 9th July, you are expecting 72 point of price oscillation. 72 price points. So this 72 will be considering and applying the Fibonacci, Gann and Elliott principle. So applying Fibonacci principle, I am getting that on 9th July, the next trading day, if Nifty is at 5861 level, then I can say it is a uptrend. If it is at 5806 level, then I can say that it is a downtrend. Definitely the distance between 60 and 6 is too high, but this I cannot able to ignore the principle. To satisfy my mind and my wish and will, because market never driven by my wish and will. So Fibonacci, if it is considered to be a method to judge the trend properly, then definitely I have to stick to this principle. Then the 0.5, 0.618, 0.78 and 0.88 retracement, wherever it comes, that is my target. So this is what is being used here. This is what it is being used here. And if I am using the Gann principle also same way, I will be getting some things. Now question comes, some people says that okay, I will enter it here and I will be entering it here. Then if I hit the stop loss, then 30 to 40 points is gone for me. 30 to 40 points is gone for me. And if I wins also, then so it means if I wins also, I'll be just to 1 or 2 level or 3 level of target, some 14, 15 points I can gain. So is it advisable to follow this method? Now question comes, so if you consider this particular example, 5861 if I am buying and 5806 if my stop loss triggers, it is a very great distance, around 50 points I am losing. If I am winning also, first target will be 9 points, second will be 17 point, and third will be some 12 points. And if I am fortunate enough and going for the final target also, 40 to 46 points I am winning. So in that case, whether it is advisable to follow the volatility principle. So some people also argues, because all arguments which is against the view of this also I am putting. Some people also argues, if I achieve till third target, for 4 or 5 incidents if I got the success and one incident I fail, then all my profits are turned to be a loss. So I will be in a losing side. So how I can, whether, because I can't able to dilute the Fibonacci principle, I can't able to dilute the Gann principle, I cannot able to dilute the Elliott's wave principle just to please us. So what I can do? So I will give you a very simple solution. Whenever you are going for a uptrend breakout, 5861, suppose your 5861 uptrend has got breakout and you are expecting a final target of 5906. Till this point you are expecting 5906. So at this point of time, one simple trick, your downtrend is at 5806. At this particular time, it's nothing wrong if you can just take one in the money put option. Suppose if you are buying this Nifty at 5861 and you are saying that 46 point is a great loss making point, so why not you buy a 5900 put option at that particular time? It's in the money, it will be having some lesser component of time value as compared to out of money options. I am at 5861, 5900 put option is having 40 rupees as its intrinsic value. So what happens at the day end? If my stop loss triggers at 5806, instead of losing 46 point, I may recover some 60 to 70 points or around 30 point I can recover from this, and my effective losses will be 15 to 16 point. Same way, if I win till 5906, instead of 46 point here, instead of 46 point win, I can be winning only some 20 points out of that, 20 or 25 points. So by this process, I can manage my risk without diluting the principle of Fibonacci, without diluting the principle of Elliott, or without diluting any of this volatility principle. I can still manage my trade. So that process of your trade management also a great part of your success. It can add to great part of your success. Suppose like our previous example we have taken here, suppose index future. So for Nifty, suppose we have taken here Nifty 29th August. So let me see what are the things. So this is the point we have bought here, 5866, we have 5766, it has given us a breakout, we have bought it here. 5746 is my stop loss. Nothing wrong with this buying of 5866. If I buy one 5800 put option along with this one, so, and I'll also evaluate and show you. I'll also evaluate and show you how it is going to help you, and what will be the, if it is being taken with the option, then what will be its success ratio. So I am taking 5,800 put option here. Put option here. So 5,800 put option, which is at 139. Put option. If my values are changed, then I can 36. So 39 rupees it is quoting now. Suppose you have come to this level of your 5846 or fallen below that. Assume you have bought at 5766 and in fact you have fallen. So 139 rupees range you have bought it. And 46 to 36 is 20 point is your stop loss, which you are not going to accept for the stop loss point. You want that some method should give me the stop loss points. Instead of 20 point, I must manage this 20 points to 10 point or 5 point or something. In that case, buying a put option at 136 or 139, whatever it is quoting now, 139 if you are buying and holding it. And once the stop loss triggers, it will be at 145. So 5 to 6 rupees you will be gaining from here. So your effective losses can reduce to 13 to 14 points. Assume you have achieved all the things, 5807. 5807. So 39 to 12. So 12 point I can less it from here. So 7, 3, 1 as 27 point you lost in the option. So out of this 66 to 807, if I can just make it 1 and 10 is as 41. So 41 points you are winning. Considering 41 point total if you are winning, 27 point if you are losing here also. So 30. So 13 to 14 points or 15 points you can win it here also. So this process you can manage your risk. But one thing I should tell you here, volatility technique has a volatility technique is having a very rare phenomenon or very managed phenomenon to trigger the stop loss. So trigger the stop loss. But I have just told you, if you are nervous enough, if you are thinking that yes, my stop loss may trigger and it can give me a great losses, then you can think of protecting that thing with an option. That also you can think of. So we have taken these views. ICICI Bank 905 equity segment. So 903 level we have come, and Nifty we have already bought into, stop loss is not being triggered, and Bank Nifty also we have not got any chances to make the entry in the Bank Nifty. So we have not got any chances to make any chances. It can rise more. 10,470 above, if Bank Nifty goes, it will rise more. ICICI Bank, if it is fallen below 882, then it should fall more. So let me hedge it with these two values. So now I'll just delete these values. Option index, Bank Nifty. I can manage this trade in a very fantastic way. So 10,470, 10,400 level only my uptrend starts. So 10,470 level I have added here. Option stock I am taking, ICICI Bank I am taking, and 880 level I am having the downtrend to start. So 880 put option I am taking. So 30 rupees it is quoting and 235 rupees it is quoting here. So I am just going for these two options buy. So for that I am just buying 880 put option at 30, and also I am buying 10,400 call option at 235. Very hefty and high premium I have paid for these options. Now I'll be saying, thinking they are uptrend. Where is their uptrend in this coming 10 days period? So ICICI Bank's uptrend is 932 and Bank Nifty's downtrend is 9849. So these two also required so that I can sell some options and offset this trade. So this ICICI Bank uptrend is at 932 and this downtrend of Bank Nifty is at 9,882 level. So this is for the 10 days period. If I am holding this stock for 10 days, this is the price point I am expecting. First, I have initiated the buy and sell on the future based on their pair trade analysis. Then to protect it, I have taken put option and call option. Why I have protected? Because it has told me to protect the trade with hedging. Because the correlation what is there currently, it is at 0.90 level, quite high correlation. Henceforth, I am protecting it. By the way of buying this put option and call option, I paid a huge money, time value to the market, which is non-acceptable to me, which I think that it can be turned to be a loss if the counter consolidates. So for that reason, I want to reduce my burden. So 930, 940 or 960 call option you can take. August. So I'm just selling one deep out of money options in ICICI Bank. ICICI Bank, I am selling 960 call option. 932 my uptrend. I am selling one deep out of money call option at 21 rupees. 960 call option. ICICI Bank, August, 21 rupees I am selling. And same way I will be taking for the option index, Bank Nifty, and 9,800 level it is starting to. So what about 9,600? Some means arbitrary strike. I just want that some amount I should reduce. So 164 rupees it is offered. So I can just sell one here. So sell 9,600 put option at 161 rupees. 161 rupees. So this is what I have done. This is what I have done. I have managed my trades. Any internet speed is desirable for this thing. So if you have a broadband, then it is good. So first let us see how it is being managed. So you can say by purchasing this one, we have 250 lot size here and here 25 lot size. I have paid this much and we have 250 lot size here, and how much we have spent in the options into, so this much only we have spent, and we have protected our trade to a great extent. So I am just taking, so only 4,400 we have just so theoretically we should project that what is the stop losses and profits we can get. Losses and profits we can get in this trade. So that also we can able to project here. So 906. So 906, I am projecting the losses now. So 906 minus 21, I sold 885 and 30 rupees I am here, lost 5. So 35 rupees will be the maximum loss if I hold this position till expiry date, and all time value comes to 0. And same way I have bought at 10,127 minus 164, 161. So this is the value. I'm just projecting the theoretical profit and loss. And I have bought a put option of sorry, I have to add it here. So how much liability I can get it here? 10,127 added with 162.29. So 10,400 I have the call option minus this one added with 235. So this much is the I can lose. So if the trade goes against me, I can lose this much. So maximum loss is set for the trade is 17,400 if I am holding till expiry. Max loss. What is the max profit? Max profit. So I have 960 I have bought it. So 960 minus your 906 plus 21 rupees you have got minus 30. So this is the 906. So if the ICICI Bank gives you success, then you can win 11,250, and if the Bank Nifty also gives you the success, so 9,600, 10,127 minus 9,600 plus 162 minus 235. Minus 235. This is if you are holding till expiry. And all time value goes to 0. So your profitability comes here to 22,600. So if you hold till expiry and the trade gives you the success, then 22,600 you can gain, considering all time value comes to 0. But you are not going to hold till expiry. You are going to hold it for 10 days period. If during this 10 days period it doesn't gives you any success, no breakout above 10,470 or no breakout above below 1882, then you need to come out from this. You need not have to pay a huge margin. Mr. Hiren Lakhani just put one question. Do not copy paste and send it. It will be considered as a spam. It will remove that from you the room. So please don't do that. So here what happens if you if you hold it for 10 days and during this 10 days you do not get, means if you do not get any of the success, then you can come out. So because Sharma has told Nifty stop loss has triggered, that time the put option has awarded him 10 points. That is 10 points. So definitely 20 points out of 20 points, 10 points he has managed. So this is how you are going to hold it for maximum 10 days. During this period, if it doesn't gives you any breakout, then you can think of coming out from this thing. And selling the options, some people are saying that it requires a huge margin, this, that, all these things. I'll show you one pair trade. I'll show you one pair trade. You all are in this room. See one pair trade also. See one pair trade also. I never go by anything I speak. It must one pair trade also I have taken. Certain call options I have closed and other things also I have done. Just I will show you, it is in my personal account, my open position. So just by passing one critical comment that it takes huge margin and all these things, that doesn't mean that you should not do any trade in this thing. And So for experiment's sake and sometime for the trade objective, I used to take some positions. I'll show you that open position, what I have and how much margin it has taken. If that much of margin also you don't have to trade, then I can't help you out. If you are just sitting in the market with 4,000 to 5,000 rupees, think about this trade. Sold Bank Nifty, State Bank of India, I am just rolling over for a long time. State Bank of India I bought. I am having a 17 put option here. In fact, it is being hedged from a very beginning stage. I also have a 9,500 put option sell. Same kind of strategy. One position I have closed it off and 10,100 call option, one long is there. 11,000 also, one long is there. So this is the position. State Bank of India, Bank Nifty, and these are the things. Because since it is being rolled over, some of the positions are left out. Some of the positions are left out, like 2,200 call option is left out, like 11,000 call option is left out. So I just kept it just like that because I can close it also to get some money back. So all this pair trade position, how much it has taken? How much it has taken? 21,000 here, maximum, 7,000 here. Let me go to the limit part. You can just see how much is being blocked. 29,000 it has taken. 29,000 it has taken. But if that much of capital also you do not have in the future trade, then what I can tell you? Selling of a call option, put option, broker told me that it will take future margin, this, that. Don't go by the broker. It is considered as a spread margin. Whenever you initiate such kind of trades, your margin requirement used to reduce, not used to increase. If you can buy only Bank Nifty or sell only Bank Nifty, that also you have to pay some 21,000 margin. But by this process, minimum margin is 7,000 is required. But for the safety sake, I have just kept some higher margin here. Here minimum margin is required 2,000 rupees for this one put option. In fact, one call option sell was there that I have closed it. So this is the margin requirement for any pair trade position.